Okay, so Senator Warren says no rate hikes. Steve Forbes is with us. Is this one of those occasions when you would be in agreement with a socialist senator, Elizabeth Warren?
No, it's only Monday morning.
Yeah, right. Yeah, here we go.
And the answer is yes.
Yep.
The Fed should not. The Fed only knows how to fight inflation by trashing the economy. It goes back to the theory that if you want low unemployment, you have to have higher inflation. If you want lower inflation, you have to have higher unemployment. Experience shows that's nonsense. We showed it in the 80s and 90s when we had low unemployment and low inflation. So on that, she's right. She's wrong in everything else in the sense that her policies helped create this mess and hurting the economy's recovery. Back in the 80s, we had lower taxes, we had deregulation, the economy boomed, and a relatively stable dollar, we got a boom. But low inflation.
But if we back off, no rate hikes, no more rate hikes, if we do that, don't we let loose inflation?
No. The way you conquer inflation, the whole definition of monetary inflation is lowering the value of a currency, usually by creating too much of it. And so the Federal Reserve should say, as they did in the 90s, they're looking at commodities. They want a stable value for the dollar. That's how you fight inflation.
And but what do? They pull money out of the economy?
What they do is they pick a benchmark. Greenspan did it in the 80s. He had what you might call a sloppy gold standard. He looked at the price of gold, he looked at the price of commodities, and if things started going one direction or the other direction, he would either tighten or loosen. Keep the dollar stable in value. It's like when you buy a pound of cheese. The pound doesn't fluctuate each day, 14 ounces, 18 ounces. You need stable money. But no central bank talks about that today. Astonishing. 4,000 years and they haven't learned anything.
All the central banks are ganging up for a bailout. Now, let me pursue that. Let's suppose that things really go downhill in this current banking crisis, and we're in a situation somewhat similar to 2008. We're faced with a choice, bail them out or let them crash. What would Steve Forbes do?
What you try to do is make sure you don't get that kind of panic.
Okay.
But that means
get in there, we're right down to the line there. There's a crisis, panic. Do we bail or do we let them crash?
No, you don't let a banking system crash.
Exactly.
And Britain showed it back in the 1860s when they invented a lender of last resort. So the innocent banks don't get crushed by the bad things the bad banks did.
So it will be the Federal Reserve that is the lender of last resort?
Yes, the only one.
Or United States Treasury?
The Treasury can't do it. They can make, along with the Fed, make guarantees, but the Fed's got the discount window.
And if it comes to it, that's what we have to do?
Temporarily. What we didn't do after 2008 was we kept doing bad stuff after the crisis. You deal with the crisis and then step back, which the Fed did not do.
You know, I probably made a few enemies this morning when I came out and said, yeah, if you got to bail, you bail. I don't think that was very
Cardiac
popular.
arrest is not a good thing for the financial system.
No, it's not. Steve, thanks very much.
Thanks.